Hey you guys, welcome back. In today's episode, we are continuing our series with time frames. Now, if you did not see the last video from Monday, where I'm actually giving an introduction into what time frames are, determining if you are a long-term swing trader or a short-term swing trader, and how to feed through the noise with time frames, I highly suggest you go back and watch that video. Let's get into what we're going to be doing today. Today we are on the charts. I'm giving out some really good detailed views of what the time frames are that we look at when it comes to the weekly, daily, and 12-hour time frame. Now, if you've been struggling with time frames and trying to figure out how to put your time frames together and understanding what they mean when you get on your chart and the important parts of a time frame that you should look at, we're going to hop into that in today's video. And my prayer is by the end of this video, you will be ready to hit those charts. You will be ready to not only analyze, but you'll have a greater understanding of what you're actually looking at and why you're pairing together the time frames that you are pairing together. So let's go ahead and let's jump on the chart. Now, if you want to follow along with me, I always think that is great. So what we're going to do is we're going to start back here March 10th. 2023. Now let's talk about the difference between looking at the market candlestick by candlestick and then looking at the market as a flow. When you're looking at the market candlestick by candlestick, you're paying attention to the high of the candlestick, or how high did price go for a week, or how low did price go for the week. So here's a really good example. Let's just say that it's a Sunday and you're analyzing your price charts, and then you realize that, hey, price closed as a bullish engulfing or a doji plus an engulfing, or however you see this candlestick, right? You could even see this candlestick as a hammer. What's going to matter is, one, are you going to continue to be the buyer if you realize that price closed very, very bullish? Or are you going to sit on your hand for the week and wait for more confirmation? Now, notice how I said that. This all depends on your strategy, because we all don't trade the same way. It just depends on how you uniquely see the market, right? So let's just say, for example, for me, I am a trend trader and I love buying low, which means I'm looking for price to stay above the low here. You may say, hey, I'm a trend trader and I like to buy above a high. And so you may buy above the high. So what's going to matter is what you do next. Once you realize how price closed for the week, all you're going to do is drop down one time frame. So I'm just going down to the 24-hour time frame. You may notice here that this was the high of the week, and then this was the low, and then price ends up going higher. And so when you realize that, and you realize how price closed for the week because it did close bullish, then you're going to also start to notice the flow of the market and how price flows. So let's just say, for example, when price passed the high at 1.07579, well, you notice that price made a new high, and maybe you were able to enter at the high. I want you to pay attention to what happens next. Price is up the following week, making a very new high here on the daily time frame at 1.09298. Now, why is this important? This is important because when you're noticing the momentum that happened on the weekly, you're going to start to see evidence of how it plays out on the daily time frame. And now this is when we're going to start to say, okay, whatever I see on the weekly is going to be more detailed on the daily time frame. So hopefully you have tools on the daily time frame or saved templates, so that way when you go back up in time frames, whatever you mark does not go up on the weekly with you, because you don't want those markings from a lower time frame on a higher time frame, or that time frame will be cluttered. But anyway, so we have a new high. And then you notice that we also have a new higher low, and then we also get a brand new higher high. Now, let's see how this looks on a higher time frame. Once again, we're going back up in details. Now you can see what I mean here. When I went back up to the daily time frame, nothing showed on the weekly, but you can see how on the weekly time frame, that high that we marked out on the daily is right here. I'm going to go ahead and make this a different color. And then the low of the week is literally right here. So once again, when you're looking at this and you say, hey, well, for the following week, price closed bullish as well, And this was the high at 1.0983. This is the low at 1.07012. But now you can see we're starting to get that higher high, higher low, higher high, higher low combination. So now you come in the next following week and you say, hey, I want to be the buyer again. And so now this is when you're going to say, hey, I'm going to drop back down in time frames and we're going to fix this up here. Say, hey, I'm going to drop back down in time frames and I want to be the buyer again. And so we can see the following week, we will be looking for more buys. And once again, like I said, I'm a person who likes deeper pullbacks. So I will be buying above 1.073. This is not going to be where I'm going to mark out where I want to personally enter the trade for a buy. You may buy above the high. I'm a person who likes a deeper pullback. I'm going to buy above the higher low. But technically, we're still kind of, doing the same thing. It's just the way we look at the market. But this is how you break down one candlestick and you trade the flow on a lower time frame. Now, when it comes to the weekly and the daily time frame, what you want to do is you want to ask yourself, when I'm on this weekly time frame, am I looking at the last weekly candlestick or am I looking at how the market flowed on the weekly time frame? Because there is a difference. When you're looking at a candlestick week by week, what you're looking at is how price closed, and then you're dropping down to the daily time frame to get evidence of that trend of those 5 candlesticks. And you're saying, okay, because price closed, let's just say bearish on the weekly time frame last week or this previous week, I can see the evidence of it on the daily time frame, and here's how I can trade this going into this week. So there is a difference. But when you're looking at the weekly time frame from an overall perspective, now you're saying, okay, I can see the trend on the weekly time frame. So now when price pulls back and gives me an entry, now this turns into a longer term swing trade. Do you see the difference? Now what we're going to do is look at the flow on a higher time frame. So we're going back up to the weekly time frame, and now we're just going to erase everything. So when you're looking at the flow of the market on a higher time frame, what you're wanting to do is now you want to see how price is trending. So there is a difference here. So I'm going to look at a full scale picture when something major changes. So instead of me looking at price action candlestick by candlestick, now I'm looking at it as far as a high and a low. So for example, here on the weekly time frame, this was back in January, you can see that we had a high at 1.10 or $1.10. And then price is falling back to 1.05 or $1.05. But then price made a very new high here. And this is very significant because that means that price passed the $1.10 mark and it actually went higher. And so at this point in time, depending on how you trade, whether you trade a breaker structure or whether you trade higher highs and higher lows or the momentum or whatever the case may be, you can say, hey, because we have such a significant change, you can say, I want to continue to be the buyer going with the overall flow of price action, or I want to be the buyer in the future and just focus on what's currently happening. You are taking into account that the buyers still have control of the market, and you're very well aware that there could be a pullback. And this is when you can say, okay, I understand that price is still bullish on the weekly time frame, and now we're starting to retrace, aka pull back. And so this is when you start to say, okay, I can continue to be the buyer if price does this. And if you are a trend trader, as long as price stays above the weekly higher low, you'll continue to be the buyer. But you could also maybe sell the information until price gets to your stopping point. So for example, I'm going to put up my stopping point. So if this is my stopping point, right? Then when price gets here and shows me a change of flow on the lower time frame, then I may want to be able to take a buying opportunity from this part, right? So on a lower time frame, this market condition went into quiet mode, or the market condition went into high volatility. Now, if you don't know what quiet or high volatility means, I have a thorough video showing you the different ways to trade different market conditions, and I will link that in this video. So please make sure you go back and watch that video so you understand what I mean by quiet and high volatility or narrow conditions, okay? So you can see here on the daily time frame, those 3 bearish candlesticks that we saw on the weekly, that's what this all represents. But how did we get here? What was the turning point for the market to turn and come back down? So we had a higher high, we had a higher low here on the daily time frame, and then we had another higher high. But price could not pass that last higher high, and we ended up turning around right here on this candlestick wick and candlestick here, the bearish candlestick. You can see the sellers took control and the market just kept falling, falling, falling. Now, keep in mind, this is where I said this would be the area where I will be looking to see if price could turn around. And as you can see on the daily time frame, now we're going to switch conversations from the weekly and daily to the daily and 12-hour. So now on the daily time frame, you can see we start to get lows and highs, but we're not getting deep pullbacks like we were over here on the left-hand side back in March and April time frame. So this is how conditions change the way the market trends, and why you can't just use just one time frame to figure out what it is you want to do, because sometimes you need more than one time frame to give you more detailed information. Now, just like we talked about with the weekly and daily time frame, when it comes to the daily time frame and you wanting to enter on a lower time frame, so like a 12-hour or a 4-hour time frame, what you want to do is look at the trend of the daily time frame, not so much the candlestick, unless you're like an avid day trader or scalper. Because as a swing trader, remember, we're trying to hold the trade for more than 24 hours. So looking at the trend on the daily time frame, those highs and those lows, it gives you a greater detail of saying, hey, I can see the trend, I can see the flow, and when I drop down, then I know I'm not going to get bombarded with so much information that makes me feel like I need to refine the lower time frame, because all the information already came from the daily. So you're choosing the daily as an overall time frame, and then just one lower time frame as the entry time frame, and you're making those two your sole focus. So we can look at this candlestick by candlestick or drop down to the 12-hour, and let's go ahead and do that. The question is, if I wanted to continue to be the buyer from 1.05, what will be the turning point? What time frame would show me that? And so you have to have a time frame that you say, hey, this is the lowest that I'm going to drop to see all the information that I need, where it's not too noisy, it's not too little information, but it's just right. So here in the 12-hour time frame, and follow me with this flow here, you can see a lower low, a lower high, momentum decreases. We have an inside bar. We have a lower low, a lower high, price stays below the inside bar. Price drops down, makes a low, and this is very subjective in this area. Very, very subjective in this area. You can see this as one move or multiple moves, but we'll go to the move that we can see. Lower low, lower high, lower low, and then price makes a higher high, and that is the turning point. The reason why this is a turning point, just like how we looked at the weekly time frame where the market made a new high after making a higher high, higher low, higher high combination for trend continuation, this is a reversal trend continuation move, going back up to the upside, where if you were looking for evidence that the buyers can come back and take control, lower low, lower high, lower low, higher high, higher low, price goes back up. So this is what it looks like to look at candlestick by candlestick formations, and then to look at the flow of price formations in order to know if you want to enter into a trade or not, using multiple time frame analysis. Now, please keep in mind that you can do this until you find what makes you comfortable. There's no rule that says you have to use all of these time frames, but if you wanted to, please feel free to do so. Remember, we want to weed out the noise from too noisy, too little information, but just right. Now, next Friday, we're going to dive deeper into this topic of time frames, where we're actually going to be talking about entries. So I'm going to teach you a little trick on how to make your entries a little bit easier to find when you're looking at these higher time frames. Now, if you've been having problems with your entries, be sure to comment below this video. Why do you feel you're having problems with your entries, or what the problem could be? And that way I can address them in this Friday's video. Go be blessed.